Okay, so today we're going to look at Chapter 15, and Chapter 15 deals with the idea of job order costing and analysis. So this is going to be the first real look we get at one of these costing methodologies in this course. So we're going to dig into it pretty quickly here as we work through this homework assignment. And hopefully by the end of it, we'll have a pretty good understanding of how these job cost systems work, some terms that we're going to use, all those types of things. So the very first thing here is just a matching type question with just some basic terminology. So the very first item here says, well, what is a cost accounting system? So if we look down at these answer choices down at the bottom, the one that's going to jump out at us hopefully is letter C. And so that will be this system that records manufacturing costs. So the next thing is, well, what is a target cost? Well, the target cost is the expected selling price minus desired profit. So if you look down at the bottom, that is letter D. Next, what is a job? Well, a job is simply the production activities for a custom product. So that's going to be letter A. Next, the opposite of a job order type of production is what we call process operations. So process operations, then we've only got a couple of letters left. We've got E and B. So let's just look at those two. So E says a production in a continuous flow of steps, and B says production activities for a special order. So a process operation is going to be more similar to letter E. This is when we're mass producing the same exact item over and over and over and over, whereas a job order production, which is what this chapter is focused on, is going to be when we are dealing primarily with a special order, which is letter B. And so that wraps up this brief introduction to a few of the terms we're going to be seeing as we work through this chapter. So now we'll move on to question number 2. And in question number 2, we're analyzing cost flows. So here we're told, as of the end of June, the job cost sheets at Racing Wheels show the following total cost on these 3 custom jobs. So this paragraph right here is going to be very important. We're going to keep coming back to it as we go, but I just want to briefly highlight a few items as we read through it this first time. So job 102 was started in production in May, and the following costs were assigned to it in May. Direct materials, $6,000. Direct labor, $1,800, and overhead, $900. Jobs 103 and 104 were started in June. Overhead cost is applied with a predetermined rate based on direct labor cost. So based on direct labor cost. Jobs 102 and 103 were finished in June, and job 104 is expected to be finished in July. No raw materials were used indirectly in June. Using this information, answer the following items. So the very first thing that we want to look at here is for job 102. How many materials were requisitioned? Well, we've got $15,000 per our job cost sheet. But if we look, what we want to know is how much of that was requested for June. So if the entire job 102 has $15,000 in direct materials, but we started that in May, we're going to have to back out the portion from May. So if we look back up here, we'll see that we actually got $6,000 of those direct materials in May. Now that gives me a total of $9,000 for job 102. For job 103, since it was actually started in June, and for job 104, I can just pull the numbers straight out of the table. So this will be $33,000, $27,000, and that will give me total materials requisitioned of $69,000. Now the second piece here asks us to do the same type of activity for the direct labor. So if we look, we see we have direct labor of $8,000 for job 102. But because job 102 started in May, we have to back out the portion from May, which was $1,800, which leaves us with $6,200 for job 102. Once again, jobs 103 and 104 were both started in June, so we don't have to back anything out. So we can just take the $14,200 and the $21,000, add all that up, and we will get $41,000 $400. Now, the last piece of this question, or the second to last piece of this question rather, asks us to determine the predetermined overhead rate. So we haven't talked about what a predetermined overhead rate is up to this point in the semester, so we'll stop and do so now. So the predetermined overhead rate is just the ratio of the amount of overhead that we're going to assign to jobs divided by the amount of direct labor cost assigned to them, since in this case we're doing this with the direct labor. Since the same rate is used for all jobs started and completed, the ratio for any one job should then equal the rate that was applied. So we're going to see how we're going to actually do this. So for job 102, we're told that overhead applied was $4,000. And our direct labor was $8,000. So we get a ratio then of 50%. Just to show you that this will work all the way across, we'll go ahead and do job 104. You could do the same thing with job 103, but we're not going to right here. So I'm going to take the overhead applied to job 104, $10,500. I'm going to divide that into the $21,000 of direct labor, and once again we will see there's our 50%. So hopefully that makes some sense. Now moving on to the very last part of this question, we're going to figure out the total cost to the finished goods inventory. So for job 102, we've got direct materials of $15,000. We've got direct labor of $8,000. And we have overhead of $4,000, which gives me $27,000. For job 103, I'll take my $33,000 in direct materials, my $14,200 for direct labor, and my $7,100 in overhead for a total of $54,300. When you add those two items together, you'll get $81,300 for your total, and that's made up of $48,000 in direct materials, $22,200 in direct labor, and $11,100 in overhead. Now you say, well, why on earth are we only doing this for jobs 102 and 103? And that's because of this line right here. Job 104 is expected to be finished in July. We can't move something to finished goods inventory until it is finished. But we were told jobs 102 and 103 were finished in June. So that's why when the question asked us for what costs we're going to finish goods inventory, it was simply all of the costs assigned to both of those products. So that wraps up the end of question number 2. Now here with question number 3, they give us some information, and they say Star Company reports the following information for the month of August. And here, they're going to want us to actually do some journal entries. So, just like in our financial accounting, and where we had a lot of journal entries, we're going to be seeing quite a few journal entries in this course as well. So take the time now, get familiar with them, and it will make your life easier as we move on through the rest of the semester. So let's tackle this question together. So the very first one says, let's record the journal entry for the raw materials purchased. So where is that going to go? If we purchased some inventory in 231, we would have just debited inventory. That's kind of the case here, but here we've got to be a little bit more specific. So here, instead of just inventory, we're going to call this raw materials inventory, and that will be for $76,200, as we see in the table. And the question is then, are we going to credit cash? Are we going to credit accounts payable? It's pretty easy to miss it in this one, but it actually does tell us in the table we purchased this on account. So since we purchased this on account, a credit to cash would actually be incorrect. If it doesn't say one way or the other, you can credit either cash or accounts payable, but in this case we are told we bought this on account, so I'm going to credit accounts payable. From this point on, I'm just going to credit AP for accounts payable, and I'm not going to actually write it out. But I wanted to at least write it the first time, just so we could establish that. So once again, our credit, $76,200. Just as in financial accounting, debits and credits must also always equal here in managerial accounting. We got away from GAAP, so we do have a little bit less restrictions in some areas, but that is one area that we do not compromise in. Now, the next one says, well, what about these direct materials that were used in production? So with managerial accounting, you've essentially got three main groups of inventory. You've got raw materials inventory, you have work in process inventory, and you have finished goods inventory. So the way this is going to work is when you first purchase inventory, you first purchase the items to make your actual goods, it will go into raw materials inventory. As you start to use those in production, it will move from raw materials to work in process. Once you're done and you've completed all the work that needs to happen to those goods, then you will move to finished goods inventory. Now, how does this actually work? Well, the rule is pretty simple. Wherever you are going, you debit. Wherever you are coming from, you credit. And we'll see that here in part number 2. So here we're seeing the direct materials that were used in production for $48,000. So if those have been used, then they have moved from raw materials inventory to work in process inventory. So my debit, as we said, will then be work in process inventory for $48,000. But where is that coming from? That is coming from that raw materials inventory. And that'll be a credit for $48,000. So what you see here is both of these are inventory accounts, therefore they're both asset accounts. Because of that, a debit increases the balance and a credit lowers the balance. So all we're doing here is shifting from one asset account to another. So if you think back to 231 when we said we used this accounting equation of assets equals liabilities plus stockholders' equity, all that's happening here is one asset's going up, one asset's going down. There's no effect. So we see that still holds true in this course as well, although that's not going to be the focus in here. I'm just showing you that here at the very beginning, just so hopefully you can start to make some connections to some accounting knowledge you've already got anchored in pretty solidly to help you make this switch from financial to managerial accounting. So the very next item here is how do we record this direct labor used in production? Well, we're not going to use something like direct labor inventory because that doesn't make sense, right? You can't store labor. So we're going to have to rethink what we're going to use here. But it's actually pretty straightforward. Since this was direct labor, then it is part of that work in process. These are the people with their hands on the goods actually transforming those raw materials to those finished goods. So just like the direct materials, the direct labor will go to work in process inventory. So we're just putting it into the same position as those direct materials so that all those costs associated with transforming these raw materials into the finished good are all kept together. It makes it nice and clean. So that will be a debit for $15,350. Now, can we credit to something like direct labor inventory? Well, once again, we said that doesn't work. So we've got to rethink how to do this. Well, in this case, it tells us that these wages have been earned by our employees. If those wages have been earned by our employees, but we have not yet paid them, and we are under the assumption we have not yet paid them, then what we will need to do is credit a liability account called factory wages. And then I'm going to give you a question here. Is that going to be an expense or is that going to be a payable? So we're going to see if you remember from 231, the expense is not a liability, it's just an expense. So the key word for those liabilities then is the payable. So we recognize we do owe them that money. We will have to pay them in the future. So we will credit factory wages payable for $15,350. So work in process inventory, it's an asset, it's going up. and factory wages payable is a liability. It is also going up. So the very next item here is we want to look at how we apply overhead. So overhead, if you've read through the chapter, is this idea of there's certain costs that we can't directly trace to an individual cost object. So instead we have to guess and say, well, how much of that total cost do we think comes from things like utilities or supervisor salaries and all these items? Because we still got to cover those items, but we can't necessarily trace them to each individual basketball that's been produced, or baseball, or hockey puck, or whatever it is, right? We can't directly trace those salaries and those utilities costs to each individual item. So instead, we just apply them, and then at the end of the period, we'll make an adjustment for actual, and we'll clean the books up a little bit. But in the meantime, we've got to make some kind of an estimate. And so in this case, we apply overhead at a rate of 120% of direct labor cost. And this is a pretty common way of doing it, is by doing this with the direct labor. Please don't think we're always going to use 120%. We may not. That really just fluctuates problem to problem. So in this case, it does happen to be 120%. In the next question, it could be 80% or 150% or 200%. Right? That percentage will change as we move throughout the semester. So how are we going to do this? Well, to apply this overhead, we are going to debit, once again, the work in process inventory, and this will be for $18,420. And you say, well, how on earth did you get that? And that's just going to be this 15,350 times 1.20. And the credit then will go to factory overhead for $18,420. And so that wraps up how that question is going to work. Now, one of the rules that we want to talk about very briefly here while we've got this idea of overhead is you can actually imagine a T account for overhead. And on the left side, you're going to have your actual, and on the right side, you're going to have applied. So this is going to help you tremendously if you can memorize this now in Chapter 15 and understand it as we work through the rest of the course, because we're going to be dealing with overhead all semester. So if you remember the way T accounts work, the left side is a debit and the right side is a credit. So here we are applying overhead, so we credit factory overhead. If we were dealing with the actual overhead incurred, we would need to debit factory overhead. And so hopefully that'll help you make sense of when you need to debit, when you need to credit. Or if you're not sure, as long as you can figure out the other side of the transaction, if you know the plug goes to factory overhead, you can always get it that way as well. So however you feel more comfortable is fine, but do know this table right here we will be seeing all semester long. So hopefully you spend some time now to figure that table out so that it's not a problem for you as we move through the rest of the semester. Because factory overhead does tend to be one of the items that people mess up on the most, and it's not because it's difficult, it's because they get confused and they don't take the time to draw out that table on the first page of their exam and just flip back to it when they need it. Because 45 minutes, an hour into an exam, when you've had all these questions about other stuff other than overhead, if you haven't really committed that to memory, you may get those items flipped. So make sure you don't do that. Make sure you take the time, draw out the T account, and you'll get every question about overhead right, or you'll at least give yourself that better opportunity to do so. So here in question number 4, we're told custom cabinetry has one job in process, and that's job number 120 as of June the 30th. At that time, the job cost sheet reports direct materials of $6,000, direct labor of $2,800, and applied overhead of $2,240. Custom cabinetry applies overhead at a rate of 80% of direct labor cost. During July, job 120 is sold on account for $22,000. Job 121 is started and completed, and job 122 is started and still in process. Custom cabinetry incurs the following costs during July. So, got a lot of information given to us here. So the question is then, how do we figure out how to work these journal entries? So we're going to go through them together as we go down the list. So the very first item here, of course, is to figure out the direct materials used in production. They were nice enough to just give us that total, so I'm going to debit my work in process inventory for $9,500. Now, if it's going into work in process inventory, it has to be coming from somewhere, and where did we say that was coming from? That is coming from raw materials inventory for a credit of $9,500. So that wraps up the very first part of this question. Now, the next part of this tells us that we're going to need to come in and figure out the direct labor. So the direct labor then is once again given to us here as $8,000. So we're going to take a debit to work in process inventory for $8,000 and a credit to factory wages payable for $8,000. Now, they want us to look at overhead applied. So when we do this, there's a shortcut to get this journal entry if you want it. And since they told us we use 80% of direct labor, I can simply take the 8,000 times 0.8 and get that this right here is $6,400. While that will work, it is not how I recommend that you do this. And the reason for that is because when we get to selling these jobs, we're going to need to know how much overhead was applied to each individually. So this is a good check method to make sure you don't make a silly mistake, but really what you need to do is 2,200 times 0.8 to get 1,760, 3,700 times 0.8 to get 2,960, and 2,100 times 0.8 to get 1,680. Now, when you go back, you should be able to add up the 1760, the 2960, and the 1680, and you will come back to this $6,400, which is very good. But it's very important that you go that route to get there, otherwise to make a mistake. So instead, what you want to do is go the route that we just talked about. So let's knock out these journal entries real quickly. So the very first thing then to apply overhead is a debit to work in process inventory. So I'm just going to start abbreviating as WIP for $6,400 and a credit to factory overhead. So if you recall from the last question, we said when you credit factory overhead, you are applying it, and that's what we're seeing here. Now the next item is we sold a job. We sold job 120. Well, just like in 231, when we have a sale, we're going to have two journal entries. So the first one is to record the cost of goods sold. So let's just go ahead and do this. Debit to cost of goods sold, a credit to finished goods inventory. And the question is for how much. So there's basically two routes to go here. I'm going to go the route I expect you probably went, and then you realize that there was a mistake. And so we'll go that way, and then I'll show you all of the steps that you need to get this correct. So the very first thing that you want to look at is the information that we were given in the table, because that's where your eyes are most likely just going to be drawn to. So you're going to take a look at direct materials for $1,000, direct labor for $2,200, and overhead applied for $1,760. If you add all that up, you're not going to get the right answer. You're going to get $4,960 for your cost of goods sold, which is almost right, but it's not quite correct. And the reason is because you forgot about the costs that were incurred prior to this month. So you've got to look back and see, well, did any work happen to this job before? And in June, actually, some work got done. So it's not just this, but it's also these additional direct materials, direct labor, and overhead applied back from June. So that's going to be direct materials of $6,000, direct labor of $2,800, and applied overhead of $2,240, which will give you $11,040 from June. You'll add that back to the cost that you had in July for the overall total cost of $16,000. And that is the actual correct amount for your debit and for your credit. Now, just like any other time when we have a sale on account, how do we record that? Well, our debit will go to accounts receivable. And from now on, this will just be AR, because I don't want to have to write out accounts receivable every time, and you don't want to have to watch me write out accounts receivable every time. So that debit will be for the sales price of $22,000, and the credit, just like always, is to sales revenue for $22,000. Now, I do believe your textbook just calls this sales, so on a homework assignment or even on the exams, if they're given through the homework system, you may not be able to find the account sales revenue. It may just be sales as the option. If that's the case, then I will accept sales. If you are taking the test in class, then I would ask that you include the full title sales revenue so that I know that you know that is a revenue account, and it's that much more clear to us. So we just want to make sure we have that understood. So the next item then is to complete the work in process inventory and the finished goods inventory accounts as of the end of July. Assume there are no goods in finished goods inventory as of June the 30th. So for job 121, we see our direct materials were $6,000. Our direct labor was $3,700, and our overhead was $2,960, giving us a total of $12,660. For job 122, we see direct materials $2,500, direct labor $2,100, and overhead $1,680, giving us a total of $6,280. So the question then is, well, are these finished goods? Are they work in process? How do we know? So we're going to come back to the initial paragraph. We're just going to reread it. So custom cabinetry has one job in process, job 120, as of June the 30th. At that time, blah, blah, blah. All that's about job 120. We don't really care. We need this bottom section during July. Job 120 is sold on account. Job 121 is started and completed. Job 122 is started and still in process. So what that tells me then is job 121 is finished goods and job 122 is still work in process. So my balance for work in process is $6,280. My balance for finished goods inventory, $12,660. And that wraps up that question. Next, we need to just look at more journal entries. So here we see we need to record the raw materials being purchased on account for $90,000. Hopefully you've got this entry down by now. That's just a debit to raw materials inventory for $90,000. And once again, a credit to accounts payable for $90,000. And you say, well, why is it not cash? And it's because they were purchased on account. If it just said record the purchase of $90,000 of raw materials, I would accept cash or accounts payable. But in this case, it does tell you specifically on account, and for that reason, it is a credit to accounts payable. So next we see direct materials were used in production, $36,500. Indirect materials, $19,200. So the way you're going to handle this is I'm going to recommend you just split it into two separate journal entries. So the first item is a debit to work in process inventory for $36,500 and a credit to raw materials inventory for $36,500. So that wraps up the first piece. Now the second piece is a little bit different. In this case, we have indirect materials, which are part of factory overhead. Unlike what we've seen with factory overhead up until this point, though, this is not an application. This is actual indirect materials used. So instead of crediting factory overhead, we're actually going to debit factory overhead. So we'll debit factory overhead for $19,200, and we will credit raw materials inventory for $19,200. And so that wraps up letter B. Now letter C, they tell us that we paid cash, so we're going to see cash in this journal entry for factory payroll for $50,000. Of this, $38,000 is for direct labor and $12,000 is for indirect labor. So the portion that is for direct labor is going to go to work in process inventory, $38,000. And the portion that is for the indirect labor, the $12,000, will go to factory overhead. Notice this is actual factory overhead because we are debiting the account. And our credit that we paid them with, that cash, will be our credit for $50,000. So let's just say you got confused anyway. You knew the work in process inventory had to be a debit. You knew the cash payment had to be a credit. If you just skipped over factory overhead and left that line in the middle blank for a second, you could look at it and see at that position in the journal entry, you would only have $38,000 in debits, $50,000 in credits. So if you credited that factory overhead account, you would just make that disparity greater, which would not be the goal. Instead, you need to bring that journal entry back to balance. And so even if you couldn't remember, well, actual factory overhead is debited, applied factory overhead is credited, you could just look at this and say, okay, well, that makes sense because that balances my journal entry. It's not the ideal way to do it by any means, but it will work. And so if you do run into that position where you freeze up on a test, no, you can always do the rest of the journal entry and see what you need to balance. Does that need to be a debit or a credit? And as long as you've done everything else right, that'll work for you. So there is another option. Next, we're told we paid cash for other actual overhead costs of $11,475. So once again, we're dealing with actual overhead. So we'll debit the factory overhead account for $11,475. We'll credit the cash account for $11,475. So just as we saw in 231, a credit to cash is still for payment, and we still see that here in 232. Now, the last item here is that we applied overhead at a rate of 125% of direct labor cost. So you say, well, how on earth am I going to figure out what this number is? So what you need to look at then is how much our direct labor was. And so if you scan back up a couple of pieces of this question, you'll see of this 38,000 is for direct labor. So you'll take the 38,000, you will multiply by 1.25, and you will come out to $47,500. So when you do this, how does this work? Well, just as we've seen every other time we've applied overhead, we're going to debit the work in process inventory account, and we will credit the factory overhead account, and in this case, both for the $47,500. And so that brings you to the end of that part of this question. Now we've got a couple more pieces to this question here. So next we need to see how we handle the transfer cost of jobs completed to finished goods. So if they are now finished, they will go to the finished goods inventory, but they have to be coming from somewhere. So where are they coming from? Remember, we said we had 3 inventory accounts. We have raw materials inventory, work in process inventory, and finished goods inventory. So if we're going to finished goods inventory, it's coming from either raw materials or work in process. And it wouldn't make sense to go straight from raw materials to finished goods, so it must be that it's coming from work in process to finished goods. So that tells me that my credit then is my work in process inventory, and both of those will be for $56,800. Now, the last question deals with a sale once again. So as we did before, we'll record the cost and then we will record the revenue. The reason I like to do it in this order, or I try to, there may be times I don't do it in this order, but I like this order a lot because if you're going to forget something, you're not going to forget to record the revenue, you're going to forget to record the cost. So it's better to just record the cost first and then record the revenue. In actuality, they're both happening within seconds of each other, so it makes no difference as long as they both get recorded. But just to be safe, I do tend to err on the side of recording that cost first before we record the revenue. So let's jump in then. So when we made this sale with a cost of $56,800, what account will that go to? Well, just as we saw in 231 and as in our earlier entry here, that will still go to cost of goods sold for $56,800. Now, where does our sale come from? It comes out of that finished goods inventory for $56,800. So there's that first part of this journal entry. Now the second part then deals with the revenue side, which is the side we all like to record. And in this case, once again, the sale was on account. So since that sale was on account, we will debit the accounts receivable account for $82,000. And we will credit the sales revenue account for $82,000. And so that wraps up this question for us. So now we'll move on to number 6. So here for number 6, what we're going to do is look at cost flows in job order costing. So here I've given you a lot more information. We're going to see if you know how to pick through it, find the information you need, and pull out the information that has been requested. So that's how we're going to go through this question. So if you look, we gave you information both from April 30th and from May 31st. Always pay very close attention to the order of these dates. Sometimes they are in this order where the earlier month is to the left and the later month is to the right, but oftentimes they'll actually flip those columns on you. I don't know why, but a lot of textbooks like to do it, so just be very careful. Make sure you know which month is the first month, which month is the last month, and don't just assume that leftmost column is the first month. Hopefully it is, but sometimes it isn't. So I don't want you to miss a question just because you got careless and didn't look at that and you took something for granted and made an assumption. All right, we don't want those types of issues to happen. So what I've done is I've given you kind of an outline down here, but I've given you some options, right? So you can either add or subtract, but it's not sometimes you add, sometimes you subtract. It's simply maybe we add, maybe we subtract, but we need to pick which one of those is correct. And so we'll deal with that as we work through this question. So the very first thing that we want to look at if we're looking at the cost of direct materials used is how much we began with in raw materials. So if you look very quickly at the top, you will see that we started with $43,000 in direct materials. Now, do we need to add what we purchased or subtract what we purchased? Well, of course, we're going to add what we purchased, and the amount that we purchased was $210,000 worth of raw materials, which gives me a total of raw materials available of $253,000. You could also call this raw materials available for use. It's just a longer title. It's perhaps more apt, more descriptive. However you choose to do so is fine with me. Next, we need to either add or subtract the ending raw materials inventory. So let's see what makes more sense. I think we're going to need to subtract that ending raw materials inventory. That ending raw materials inventory is for $52,000, which gives me total raw materials used of $201,000. So once again, we got the 52,000 right there. So we can see that the raw materials that we had at the end of the period was $52,000. Next, we either need to add or subtract the indirect materials. And in this question, they asked me for the amount of direct materials used, which means if those materials got used and they were indirect, they need to come out. So we will subtract those indirect materials of $15,000. This will give me my total cost of direct materials used of $186,000. So the next item that we need to look at then is the cost of direct labor used. So if we come look at total factory payroll, we see that we paid $345,000. But just as we did with the direct materials and the indirect materials, we need to do the same type of item here. So I need to subtract any indirect labor, which was right here for $80,000. Because if it was indirect labor, it was not direct. So now I can see that my total cost of direct labor was $265,000. So the next item that we need to look at then is the total cost of goods manufactured. So beginning work in process inventory. So if we scroll up just a little bit, we can still see the information we need, 10,200. So 10,200. Next, we need to add in the direct materials that were used, and that comes from what we calculated earlier for $186,000. Next, we need to add in direct labor, and that direct labor comes also from what we calculated earlier for $265,000. Now we need to add in the applied overhead, which is 70% of that direct labor. So 70% of that direct labor of $265,000 will give you $185,500. And once again, that's just the 265 times 0.7, which gives you 185.5. That will give me my total cost of work in process, which is just a sum, which gives you $646,700. Now, the next thing that we need to look at then is the ending work in process inventory. So if I want to figure out how much I manufactured, I need to back out that is not finished at the end of the period. And so when I do that, I see that I've still got $21,300 in work in process at the end of the period, which will tell me that my total cost of goods manufactured is $625,400. Now for the next piece, we need to calculate cost of goods sold. So here we need beginning finished goods inventory, so $63,000. We will then need to add the cost of goods manufactured, which we just calculated as $625,400. We will then need to back out my ending finished goods inventory for $35,600. And when I do so, that will give me my cost of goods sold for $652,800. Now, the next thing that we need to look at is how we calculate gross profit. So we're told we made $1.4 million in sales, so $1,400,000. Next, if you remember from Accounting 231, gross profit is simply sales minus cost of goods sold. So I will then back out my $652,800, which will give me gross profit in the amount of $747,200. Next, we're looking at actual overhead that was incurred. So, to do this, we need to look at indirect materials. So, we see indirect materials, $15,000. So, indirect materials, $15,000. Similarly, we can find from the table indirect labor, $80,000. $100,000 and other overhead costs of $120,000. So once again, if you just scroll up, you'll see that indirect labor and those other overhead costs of $120,000. That tells me that total actual overhead was $215,000, but we only applied $185,500, which tells me then that I underapplied overhead by $29,500. So to see this in T account format, we just threw this down here at the bottom, so maybe a visual depiction will help you better understand exactly what's happening. So on the left side, we've got indirect materials, $15,000. Indirect labor, $80,000. And other overhead for $120,000. This gives me total actual overhead of $215,000. But the overhead that was applied is only $185,500. This leads me to have underapplied overhead of $29,500. So that's how this looks in a T account, if that helps you. If that helps you, fantastic. If that does not help you, ignore it. Because I'm not going to require you, most likely, although I could, but I most likely will not require you to do a factory overhead T account on the exam. But if it does help you, it may help you get any points related to a factory overhead question. So, very good. Moving right along then. So here in number 7, we're calculating an overhead rate and cost that is assigned to jobs. So to calculate my overhead rate, the way I'm going to do this is to take my estimated overhead costs. So just jot down estimated overhead costs divided by, in this case, direct labor cost. The actual answer here is the cost driver, but in this case, that is your estimated direct labor. So we see that my estimated overhead cost, $747,500, so $747,500 will be divided by my estimated direct labor of $575,000, which will give me a percentage of 130%. So now we need to use the information on the cost sheet to determine the total cost of the job. So for direct materials, it's simply a summation straight down the line, and when I do that, I will get 15,350. So if you want to jot down here 5,000 plus 7,020 plus 3,330 equals 15,350. You absolutely can. If you would rather just deal with it from this table, that is perfectly fine as well. So the next item then is direct labor. We'll do the same thing. So 700 plus 1250 plus 1250 is 3,200. Now you say, well, how on earth do we get this overhead cost applied? And I would point you back to what we did initially, which is where we got this 130%. So the shortcut method here is to just take 3,200 times 1.30. And when you do that, you will get 4,160. Conversely, you could take each one of these items times 1.3 and then add them all up, and you would get the same thing. So however you feel more comfortable with is totally fine. In this case, it's probably not going to make much of a difference because all the dates are in March. It's all the same job number. So there's no real need to break it out like we did earlier because we had different jobs earlier. In this case, it's all the same job, all within the same month. There would be no reason to need that separated further unless you were specifically asked by your company to do so. So the next item then is to figure out the total cost of this job. So we need to take the 15,350 350 indirect materials. Add the 3,200 indirect labor and the 4,160 in applied overhead, which will give me $22,710 for the total cost of job number 1356. And so that brings us to the end of that question. So now we will move on to the next question. And here we are told we need to adjust factory overhead. Refer to the information in 15.7. So if you recall, 15-7 was this question where we saw that we had underapplied overhead. And at the time, as you were thinking through how all of this relates, you probably thought, well, how on earth do we adjust that overhead? Because we can't just leave it underapplied or overapplied. We're going to have to make that right. And if you thought that, congratulations, you were dead on to something, and that's what we're going to look at right here. So in this case, we underapplied overhead. And if we underapplied overhead, that means we did not send enough overhead to the cost of goods sold account. So the way we're going to correct this is with a debit to cost of goods sold for $29,500. And you say, well, what on earth do I credit? So the credit then has to go to factory overhead because you underapplied originally, so you need to apply some extra. So now you will credit factory overhead for $29,500. You've now brought cost of goods sold back in line. You brought the factory overhead account back in line, and we are good to go. Now, for this next question, we're going to do the same kind of thing again, but we're going to do it in both directions. So one of these will be overapplied, one of them will be underapplied. We'll have to figure out which is which. So for Storm Concert, our actual overhead is going to be the sum of these three items. And for Val, our actual overhead is the sum of those three items. So let's start with Storm Concert. So we'll take 22,000 plus 46,000 plus 17,000, and we get $85,000. So actual overhead is 85,000. Applied is 88,200. So is applied greater than actual? Yes. Since applied is greater than actual, we over applied overhead. So the way that we're going to do this is we are going to debit the factory overhead account for $3,200, and we will credit the cost of goods sold account for $3,200. Now on the other side of this, so I'm just going to erase all this down here at the bottom. We're going to go again for the other company. We have actual indirect materials, 12,500, 46,000, goodness gracious, 46,500 for actual indirect labor, and 47,000 for other overhead costs. And so when I add up 12,500 plus 46,500 plus 47,000, what I come out to is 106,000 in actual overhead. But we only applied 105,200. So since applied is less than actual, we under applied overhead. So how do we handle that? Well, that's just what we saw in the previous question, where we are going to debit the cost of goods sold account for $800, and we will credit the factory overhead account for $800. So we are now moving on to the final question in the assignment. And this question, once again, is dealing with factory overhead. So as you can tell in this homework assignment, and as you will be able to tell going forward, we are very concerned about factory overhead. So hopefully you spend some time and you understand how factory overhead works, how it all relates to everything, what's included in factory overhead, what is not. I strongly suggest you go read those parts of the chapter, commit them to memory, and understand them very well. So in this last question, we're told at the beginning of the year, Custom manufacturing established a predetermined overhead rate by using the following cost predictions. Overhead cost $750, direct materials cost $625. At year end, the company's records show that the actual overhead costs for the year are $830,000. Actual direct materials have been assigned as follows. Determine the predetermined overhead rate using predicted direct material costs. So here I will take my estimated overhead cost of $750,000. I will divide by my estimated direct materials of $625,000, and that will give me a rate of 120%. Now for steps 2 and 3, we're going to set up a T account and determine if overhead is over or under applied. So the overhead that we actually incurred, so our actual overhead costs for the year are $830. The amount that we applied then was $822,000. And you say, well, how on earth did you get that number? And that is by taking the 120% times the $685,000 in actual direct materials cost, and that gives me $822,000 in applied overhead. So I've got actual overhead and applied overhead. So is my actual greater than my applied? Yes. So have I over applied or under applied? I have under applied by $8,000. So the question then asks us to close under applied or over applied overhead. So to do this, we will simply debit the cost of goods sold account for $8,000, and we will credit the factory overhead account for $8,000. And that wraps up this homework assignment. So hopefully in this chapter, you understand how we're going to be costing, how we're going to be doing the different items that were discussed. But the main takeaway here really is how this factory overhead is dealt with. That's one of the big topics in this chapter. If you can understand that and you can understand the other stuff we talked about, you'll be just fine. So hopefully this video helped you. Hopefully you'll come back next time. See you then.